Southeast Radio's Business Matters with Karl Fitzpatrick.
Well, the emergence of digital and neobanks across the world has prompted many questions about what new banking models might look like in the near future. John Cronin, a leading banking analyst from Seapoint Insights, joined us in Business Matters last month to discuss the current banking landscape, and he returns this morning to assess the impact which these new players could have on the Irish banking industry in the medium term. But John, how have we seen digitalisation infiltrate traditional banking models to date?
Good morning, Karl. Yeah, it's a good question. And I think if one cast their mind back to 2014, 10 years ago, digital was really only beginning to creep onto the board agenda. It was certainly nowhere near the top. And I think what really drove that initially was the rise of the fintech sector. It took a long time in the traditional world for banks to really take seriously the significant investment needs from a digitization perspective. And to be fair, some were ahead of others. And given their large budgets and given the significant pools of capital that banks have, they did channel quite a lot of investment spend in that direction over the later part of the last decade particularly, which has continued to this day. But yeah, slow initially, and they certainly, in most part, weren't the originators of that investment. It really, was emerged from ideas that were built in the fintech world.
And talk to us about open banking. What impact will it have on consumers, and how does that create business opportunities within the financial services sector?
Yeah, open banking's been around for a while, and it's effectively an application programming interface that allows, with the customer's consent, a bank to share the customer's data with a series of other banks, and then for those other banks to effectively market their services into the customer depending on what the best product for the customer is. So it can have the effect of creating a much more competitive market backdrop. But we really haven't seen, a significant change. If I look at the larger players in the UK and Ireland, for example, we really haven't seen any, direct evidence of, market share change owing to open banking. There's a huge customer trust issue. There are lots of obstacles as a result as well from a regulatory perspective. So it's still very early days in the advent of that technology. I think stepping back, Karl, one point to really make here is that, there's been a lot of talk with new entrants in banking markets for a long time, but actually the larger players have grown in size. And the reason for that is, it's balance sheet. It's very difficult to go up against the very large banks who benefit from lower capital requirements than their smaller peers, and who have, they have very strong presence and a very high share of deposit taking, which has been very difficult to disrupt. So the stronger have grown stronger, in fact.
That old saying comes to mind, it takes money to make money, John. And of course, we hear a lot about neobanks, digital banks and fintechs. But what kind of an impact can those new entrants have on the landscape over the longer term?
Well, effectively what a neobank is it's a digital bank. So it's not got the traditional branch structure. But not only that, like if you look at the criticisms that have been levied at banks over the years, from a systems perspective, from a management information perspective, the reality is a lot of banks, through a series of acquisitions over a multi-year period, patched legacy systems onto the existing systems. So there's, their internal systems are quite convoluted and it's quite scrambled, and they've done a lot to invest in those, but it's a significant overhead for mainstream banks all across Europe. Now, when you look at the neobank, they're starting afresh, often use the cloud, are able to keep costs down. And to the extent that they can scale, well, then that's where they could be disruptive. But we've not seen any, in Western European markets, we've not seen any evidence of substantive disruption in that respect yet.
And how are digital currencies going to emerge over the coming years?
Yeah, lots of different jurisdictions are looking at them in different ways. I think, from an ECB perspective, the regulator has been very clear that digital currencies are not, the central bank digital currency would not displace bank deposits. And I think that's what's key, because you could imagine a world in which everyone relies on a central bank digital currency, so it disintermediates the banks effectively. But then what's the conduit for lending into the real economy? You still need the banks from that perspective, and the regulator is acutely aware of that. So I think, look, even to the extent that the CBDC or central bank digital currency does enable customers, directly transact or interact with the central bank, I don't think that's an optimal outcome from a central bank perspective. And effectively, the central bank will still use the banks as intermediaries because of their very important presence in the lending domain.
And John, I saw you write recently about Chase UK and JP Morgan UK's digital banking proposition being a good case study. Tell us more about that.
Why I think Chase UK is interesting is, first of all, stepping back, JP Morgan has arguably been the top performing bank in developed markets over the last decade. It's deeply strategic in terms of all its lines of attack, has an enormous capital base, multi-jurisdictional presence, deep pockets to go and spend strategically and wear losses for an elongated period of time with the bigger picture in mind. Chase UK is a digital banking proposition, but it's run by a group of executives and a parent that has deep expertise within lending markets across various geographies. The way they launched it is they started, offering customers attractive rates through a very slick app, very attractive deposit rates for customers. So it was a great customer acquisition tool, albeit it would have come at a cost. They've been very clear that they're going to tolerate cash burn for a long period. They have their eyes set on becoming a full-service retail digital bank in the UK and have already started the process of entering other markets in continental Europe, with Germany and France at the top of the list there, in my understanding, given that they are large population centres. So I suspect, this is JP Morgan's effort at continuing to maintain relevance as well as gain an edge over peers internationally in a world where banking is increasingly digitizing and where actually some of the neobanks might in the long term actually work and at a lower cost than the mainstream banks, meaning they have an ability, if they do work, to price cheaper than banks to earn the same returns. So to the extent JP Morgan can make this work, and look, it's going to be a good number of years before we see how this all plays out, but it's certainly not something its peers are, they haven't, they're entering a new country, but without any branches, through a digital bank. I don't think they're doing it in the UK to be a 5% mortgage market share player. I think they have, eyes on becoming quite disruptive in a longer term context. So it would be really interesting to see how that progresses. In a local context, look, wouldn't be too worried for the rest of this decade. I don't think Ireland is going to feature high up on the list for JP Morgan. Never say never, but it certainly looks like it's plucked the countries that have very large populations and is looking to scale up on those to really build a significant digital banking proposition.
So, John, in conclusion, unless the digital banks can find a way to raise a lot of money for lending, then the incumbents, the traditional banks here, have little to worry about in the short to medium term.
I think that's a fair comment. I think, certainly they will be watching closely how everything develops, and most particularly locally, I think they'll look at Bank Inter, who want to develop a digital proposition in Ireland and Revolut and what they're doing in Ireland and in various other markets. But change takes a long time. I think for the short and medium term, I think the Irish banks are in a very strong position. I think, eventually the industry will evolve. There will be, and I don't think what we will see I used the word dominant in the mortgage context of the mortgage lending market earlier. If there are other competitors, I do think we will see some diminution in the share of the largest players in Ireland, but they can afford to take a small something of a dent in their market share and continue to print very strong returns. So I think, look, the outlook is very favourable on a medium-term view, but certainly, as a bank board director, you need to be looking at these wider changes that are happening in the industry and looking 5-10 years out in terms of how that might impact your own local market.
Well, if you've just tuned in, that was banking analyst John Cronin the founder of Seapoint Insights, and I'd like to thank John for sharing his professional assessments with us on this morning's show.
Southeast Radio's Business Matters with Karl Fitzpatrick.